Hi again everyone, and welcome back to the channel. So I've put together a little video on Marin Software, a company which has been really riding the markets at quite crazy levels this week. So let's just have a little look at how things are going with this. So the stock has been on a wild ride over the last week, and it is one that I have been making a killing on through day trading. So I thought I would make the video to explore Marin Software, ticker symbol being MRIN, a little further. So Marin enables, marketers to integrate all digital advertising data into one central platform and align campaigns across various publishers, I suppose, to maximize their return on investment through their advertising, and amplify publisher tools to drive the best possible performance. The stock is one that has generally dwelled below the $10 mark for much of its existence since it was floated in 2014 for a $14.50 share price. So what has caused it to skyrocket so much lately? There are a few factors here at play. Okay, so firstly, it has caught the eye of many retail investors, such as myself, and much of the community of Wall Street bets. The attraction probably comes from a combination of its historical beaten down price and the company's potential, as its main platform, Marin One, is often regarded as one of the best in its field. Secondly, we've had a catalyst event with the announcement that Marin Software will now be integrating the market-leading grocery delivery platform Instacart into its offerings. So there is potentially a lot of growth there for the stock, a lot of growth in business. Instacart is just going from strength to strength. And it's the leader in its field in America. And finally, Marin Software has a very small market capitalization and a small number of shares floated. Prior to last week, the market cap was below $100 million, and the total number of shares floated is only around the 100 million mark. So that means that if there's a lot of trading volume going on, that the movement in share price can be quite dramatic, which is what we have seen in the last 5 days. So like I said, I've actually been cleaning up on this stock the last few days. I've only been day trading, not using my usual accrual method, but I'm actually making like almost 1,000 US a day just from trading this stock back and forward due to volatility. Even yesterday when it was falling, I managed to make quite a bit of money on it. So while I've only been playing it for a day trading perspective, I believe there's actually a bit of a case to potentially start accruing this stock in the future, and that's kind of one of the things I want to look at a little bit in video. So like I sort of started talking about before, much of the growth that we've seen or price movement has been on the back of the news of the Instacart announcement, which was made on the 23rd of January. Basically, what that was saying was that Marin Software has added Instacart's ability to their platform to facilitate direct connections between brands and customers at the point of sale. Shares of the stock have soared to a peak of 918.2% of their price that they were at prior to the announcement. However, like I just mentioned before, there was a significant drop off yesterday. So the shares have basically jumped from a price point of $2 a share, and they got all the way up to around the $18 mark, closing on Tuesday around $17.20. However, there was a big drop off yesterday. I won't say huge sell off because, as I'll point out later on, the volume that was traded in Marin Software was actually quite low by comparison to what had been happening in those few days before. So what we're seeing here right now is the price movement yesterday, just using a simple Google chart. And as you can see, this is the price point that it dropped off at the start of trade yesterday. So it fell from $17.30 to below $14 at the open. So it was a huge drop off yesterday. As you can see, that it was down basically 38% from the highs of the day before. And throughout the day, it kind of had a downward trend. And this is where I was doing a lot of my day trading, particularly around this time here. It looks like a pretty flat trajectory on this chart, but have a look at this. That price point is shifting between around the $12 to $13 mark, and it was moving in between $11 and $12 for much of the time that I was trading the stock yesterday. So there was big swings in there. This chart doesn't really do it justice, but there was a lot of movement there. If we zoom out now and look at the 5-day chart, you can see that sort of movement. So it was around here, around the $2 mark, that announcement was made last week. And as you can see, is just shot up this week. It has just shot straight up, and this little movement down here is what we saw in Wednesday's trade yesterday. So it's quite a dramatic jump. It's gone from around the $2 mark. It hit a high in the $18 range, and right now it's sitting around $10.73. So even if you had bought stock last week around the time of the announcement on that day, you're still up about 500% at this point in time. If you're a genius and sold off at this point, if you're buying and holding, you have made about 900% on your investment. So pretty impressive. Finally, just having a little quick look at the 5-year chart. As you can see, there has been this decline in price over time. However, given the current levels here, around here, it sort of goes to show me that historically, at least anyway, there is a case for the stock to be valued around this mark, up around that $10 price range. So, even though it's been a very dramatic rise, that doesn't necessarily mean that all that is going to be given back to the market. So it could be it was obviously trying to stabilize around a price point that the market thinks it is worth, given the potential growth that the company may see, which we'll have a little look at shortly. Now, this chart here is just, I wanted just to show you something about the dramatic movements that we were seeing in the price. So what you're looking at is the last, I suppose, week in my trading app, and what I've done here is I've put the candlestick diagram, but what I've put underneath here, I've added as an indicator just to show you how much trading has been going on. This is what that is. That's the volume of trade, and this is an hourly chart. So as you can see, so this is the cutoff for, this was yesterday's trade all the way down here. Okay. Now, and as you can see, look at the volume here, very low. Okay, so the volume there per hour, it was trading less than 1 million shares an hour. Now, 1 million sounds like quite a high figure, and it generally kind of is. But if you were looking the day before, this is when I made an absolute killing. I made quite a bit yesterday, but the Tuesday session was an even bigger one. Look at these towers here. By comparison, they were trading 80 million per hour. If you broke this down to a minute, I actually looked at it on a minute by minute basis, and you could see that there were literally minutes where more than 1 million shares changed hands. It was crazy how this was going yesterday, and you can see that these high figures have actually maintained ever since that announcement. It's been quite high. They're showing up. Look at this. You can't even see it. It's not even registering. This is like the volume, the trade volume that existed prior to the announcement. So it was very flat. It's been these last few days that has been extremely volatile, and you've been seeing this huge price movement going up here and then settling down there. This is just some very basic market data that I think is worth having a look at. So obviously we've got here, this is a bit more of a technical thing, but there's a negative beta score there. I usually want to see something a bit more positive. So that's not a very good indicator. Earnings per share lost $1.50 on average. Okay, so not good. There's that impressive price range that I was telling you about. Now, while this bit's not a bit of data here, this is probably something that's worth having a look at. Okay, the earnings date. So this is something that's potentially going to drive the stocks movement even more in the not so distant future. It's only about a month away, but that's when Marin Software is due to release their earnings for the year. So, this would perhaps give us a little bit more of an update about what has been going on with the company, because prior to this announcement, things actually weren't looking that great for Marin Software. So what comes out in this announcement could be quite important. So as we sort of looked at very briefly, Marin Software actually kind of is seen as having quite weak financials. Their revenues have declined 27.2% year over year. Still quite high revenue there, 6.31 billion in its first fiscal quarter this year. So it has a lot of money going through the business. This can be attributed to a 36.4% decline in subscription revenues. So we have to ask ourselves, why has there been a decline in subscription revenues? And there's potentially a pretty well-known reason to that. That could underpin a lot of this financial stuff here. And that's being that obviously we've had the pandemic going on, and it did interrupt a lot of businesses. And while I guess a lot of tech businesses did quite well, and Marin Software would be a tech business, a lot of their clients are not necessarily tech. Well, they wouldn't necessarily be tech businesses. They're just people who want to get advertising happening. Now that might increasingly become tech-based advertising, or like, you know, for tech companies, but you know, like that's gone to a lot of advertising-based businesses lost a lot of revenue last year, so that's not that surprising. Okay, so just like a lot of other advertising firms, they are down a little bit. Okay, particularly this last I guess 12 months, and yeah, we're starting to see a bit of a rebound there. So its gross profits declined 7.5% over the same period last year. The other worrying sign that they have indicated here is that their cash flows, despite declines in revenues, their cash outflows actually increased as well. So that's also a bit of a worrying sign. So just a little bit on the sentiment behind Marin Software. So it has become a Reddit favorite stock because retail investors expect the company to become a dominant player in its industry, partly based on the fact that its platform Marin One is seen as, I guess, the best in its field for advertising agencies. Given the rising popularity of digital and social media advertising, retail investors expect Marin Software to grow substantially in the coming months as online advertising replaces traditional means of advertising increasingly. Marin is expected to become an established player in this space, boosted by its innovative prowess and integration with other social media platforms, such as the recent Instacart deal that we are looking at. So that's just like one deal among many that they've got. So it's not just Instacart they advertise many different digital spaces. So what this is on here, this slide, is just a couple of other perspectives that I've come across by looking into the stock a little bit further, just other people's opinions on it, and I've just added a little bit of commentary to some of them as well. So Marin is a highly speculative investment. The current price range around the $10 to $18 mark that we have seen may potentially make it a good buy, but it might also represent a price point for it to tumble from. Okay, so this is what I also said. So I guess really what we need to wait for is to see what comes out in the earnings figures in August. Currently, Marin Software has weak financials, and just to that, I kind of want to say, like, how much of that is actually COVID related? Will the improving economy help Marin Software? Maybe. Instacart looks like a good step. Okay, and this is just based on some power ratings, this third one here. So Marin Software, based on power ratings data, is seen as a decent investment from a value, sentiment, and momentum perspective. However, the stock received poor ratings for stability, quality, and value. So my little commentary here is these ratings would be prior to the Instacart news. Does not necessarily reflect their most recent financials, which are due to come out in August. So we have to wait and see. So finally, just a few conclusions. So the stock has historically traded above the $20 mark prior to this period of time, and did so for an extended period of time. However, that was a few years ago, and it's worth also pointing out that there hasn't actually been any major capital raisings by Marin Software that would dilute the number of shares. So, you know, there is potential for it to, you know, I guess kind of get back to that mark. Marin is seen as a market leader in their particular services, so there's a lot of runway for potential growth, particularly as the world is going increasingly more digital. And this makes the current price range potentially quite a good one at the moment. And this could be a good time to consider looking at the stock a bit closer. This is not an endorsement by me to go out and buy the stock. It's just maybe it's worth having another look at. And just finally, like I've sort of said there at the end there, we should really wait until August to make a more informed decision when we get the most up-to-date financials. For now, all I'm doing is purely speculative. If I see a bit of movement happening in it tonight, I may sort of continue on with my day trading of it. I might start accruing a few shares. I don't know. It's hard to say really. I think I'm kind of more keen to hang out to August, but I am happy to play the swings in the share if they exist today. Like always, though, you should do your own research. This is just some stuff that I've come across at the stock. Anyway, I hope you found this video useful and informative. Please feel free to subscribe to the channel for more sort of updates like this. Have a good day. Take care, guys. See ya.